and welcome to the special segment called as MC Pro Select Stock of the Day. I'm your host Nikki Mirchandani, and in this segment, we bring to you fundamentally strong investment stock ideas. Today's pick is a mid-tier Indian IT service company, Coforge. It's a leading global digital services and solution provider specializing in BFS, insurance, travel, and transportation. Why look at Coforge right now? The stock has underperformed both the Nifty and the IT index in the past 3 months. News of large capital raise has been received negatively, leading to the sharp reaction coming in for the counter. But let's look at the investment rationale. A couple of reasons there. Let's address the first one, which is growth leadership. Now, the company's growth momentum has sustained in the 9 months, sequential growth of 1.8% in Q3 despite seasonal furloughs, and full year growth has been guided in the band of 13 to 16 odd percent. Moreover, a decent quarter with reversal of furloughs can be expected for Q4. Order inflow has lent to some amount of confidence in Q3. Order inflow stood at $354 million. This marks 8th consecutive quarterly inflow in excess of $300 million. Besides, the company has bagged in 3 large deals and 7 new clients. The executable order book right now at the end of Q3 stood at $974 million. Order backlog has been growing in terms of year-on-year growth by 16%. Going by that, there seems to be a good revenue visibility for FY25. Let's look at the other factor too, margin, which is multiple factors supporting in the margin uptick. The company's operating margin adjusted for ESOP rose sequentially by 200 basis points. However, reported operating margins was impacted by furloughs. Having said that, the company expects sharp uptick of margin in Q4. The company is confident of margin improvement, tailwinds such as peaking out of sales and marketing expenses, higher offshoring and stable resources costs also working in its favor. Well, let's look at the other factor working in the favor of the company, the large capital raise, which is only expected to support in the growth aspiration. The company has announced a large capital raising plan of 3,200 crore, 9% of the current market capitalization, which would help the company not only retire debt, but also bring down interest expenses. It would help the company to build in a war chest to pursue in inorganic growth opportunities. The company's target of reaching $2 billion revenue in the next 4 to 5 years. Approximately $150 million would come in from inorganic. According to MC Pro analysis, Coforge right now is a long-term growth story, or let's just say a long-term growth leader, which could be added on any weakness. With this, it's a wrap. Thank you so much for tuning in.